Hello, everyone watching on YouTube and listening on Spotify. It's another episode of NRG Insights. And for those that haven't been listening before or watching before, this is a podcast based in the financial services market, where we speak to influential people in the market, whether that be from broking, lending, or ancillary products into financial services. So today, I am very lucky, after many requests, to get Chris Gardner from Atelier to join me. Thanks for joining me, Chris.
No problem at all. Pleasure to be here.
Good. And so tell people that don't know, if they're living under a rock and don't see your social media, but tell people that don't know about your journey in financial services to get you to CEO of Atelier where you are now.
Sure, no problem. I kind of guess as a young guy, back in the 80s, left school at 16, didn't know what to do with my life, so bumbled around doing various jobs, trained to become a draftsman. Which is what I did, product engineering and drafting. Didn't really fancy that, quite liked it, but thought I'm not going to make any money doing this. So bumbled around a few other jobs in and around town. Eventually, of all things, went and got a job working for a car dealership chain. And during my journey with that business, so I'm in my early 20s at this point.
Yeah.
You would sell the car and you would sell finance to sell the car. But that whole kind of finance experience for car dealers was a bit like a sort of a cottage industry. The finance was a means to sell the car. It quickly dawned on me during that journey that actually we made more money out of selling the finance, possibly controversial these days, but we made more money out of
finance now.
Back in the 80s than we did out of actually selling the car. So as I rose up the ranks of working at franchise car dealerships, I started to formalise the process of selling car finance and other insurance products. So because that was actually our main income stream. So I set up a car finance academy within the dealer group, and we started to train our salespeople how to sell car finance properly. We also went out to the market, put a panel of lenders together, got terms from those lenders, and in the end we rolled out that model across the entire...
Had it not dawned on people before about financial services being the thing you make the money out of, or was it just as an add-on?
Well, I think it was, we're a car dealership, so we sell cars, was the mentality. And actually the finance was the means to sell the car, which is true. But actually in a market where it's fiercely competitive, discounting was very, very prevalent. Margins in the cars were relatively small. You might make a few £100 out of selling a new car. If you would sell a finance and insurance package with it, you could possibly earn £800-900 at the dealership out of the finance. So I think it was typical of a business focusing on what it thinks is its core purpose, not actually looking at the wider landscape. So we formalised this. We introduced IT. So this was in the late 80s, which is pretty revolutionary. So we'd be able to give people quotes on a what was a PC back in those days and give them a quote. And we formalised the whole process of selling cars, and we sold the whole story of a car around its affordability. So we'd be focusing on what you could afford a month, not necessarily on what the screen price of the car was. So we changed the way in which we sold cars as well. And we ended up rolling that across the group. And it became very successful, and actually finance became a core part of the business. So that was how I got a taste of financial services. What actually happened to me thereafter, I opened my own car dealership, and as somebody that was self-employed, effectively self-employed at that point, I needed to get another mortgage. I already had a mortgage, needed to get a mortgage. And then I realised what an appalling experience it was getting a mortgage in the late 80s and the early 90s.
Do you know how many people became mortgage advisors because they had such a bad experience, or came into finance because they had such a poor experience of it? Thought that's you could have really improved that journey. It's an incredible amount then.
Back then, it was the kind of virtually unregulated financial advisor market. So again, interestingly, the mortgage back then was a means to sell insurance. So the person selling the mortgage, their principal objective was to sell you an endowment policy or some kind of other repayment vehicle, and the mortgage was effectively the vehicle to do that.
Yeah,
pretty similar to the reverse of being in the car business. So I had this appalling experience trying to get a mortgage, and I thought there's an opportunity here to do something, to create a different way of getting a mortgage. Most people didn't like going direct to their building society or bank because it was very difficult, and the intermediary market was fragmented and, mainly, middle-aged guys driving around in full Mondeos.
Insurance
an endowment policy. So I opened without any experience, went and opened a mortgage brokerage and just learnt on the fly. And did that for about a year, got a hang of the ropes, and decided the way we were going to do this is we were going to provide telephone-based mortgage advice.
Was that relatively new then? Because obviously, when you used to go to your estate agent and meet your broker, or like you say, you'd have your travelling salesman who doing their 16-hour days travelling around, making sure everyone had 2 hours with them.
It was, and it was also quite controversial. We had a lot of hostility from other people that are in the business because we weren't really interested in selling any forms of insurance. We were selling mortgages, and we would get a small procuration fee, and they were small, if any, back then, and we would charge the borrower a fee. So we set up his call centre, and I started off with one advisor, then two, then three, and then gradually grew that business over the course of 6 years. Ended up with about 130 staff in the business. We were based in Southend, out in Essex back then, and we were doing about $1 billion a year of mortgages. We had several brands as well.
When was that, Chris? What sort of timeline was that, date-wise?
6 years.
Yeah, I mean, as in, was it in the 90s or?
Oh yeah. Sorry. So we set that business up in late 98.
Oh, okay.
And grew it fairly substantially.
Yeah, nice.
So we went through what was the old Mortgage Code Compliance Board.
Yeah.
And then we went through to full mortgage regulation. I think it was 2004 it came in, where we were regulated, and we did that again very much from a panel of lenders. The core thing for us was about selling the mortgage. We weren't particularly into ancillary products, and we became a fairly important player in the market. So, around that time, there was a lot of consolidation going on. You'd sort of seen the industrialization of mortgage advice at that point, and I eventually ended up I was in business with two very good business partners as well, and with various facets and various brands to that business, and we ended up selling it to Bear Stearns, the US investment bank.
Oh, really?
Now we all know what happened to Bear Stearns.
Yeah. That wasn't the reason.
I hope not. So we continued with that business, and unfortunately, like many businesses in that market, it closed down during the GFC. Yeah, but we'd sold the business at that point, and that was the backstory. So that's my journey into financial services.
Were you still after you sold it? Were you still involved in the business, or had you bought out completely? Oh, okay, so you were still involved in it.
My last action in that business was to lock the door after we'd made everyone redundant.
Oh, gosh, okay.
I mean, it was a casualty of the GFC, like many businesses were. So that was the story of the business, and we were one of the lucky ones. We managed to exit our business, and we took some value out of it as well.
Yeah.
And that was my journey into financial services. I had a brief interlude after that. I had a property management business in Italy as well that was running on the side. We went out to live in Italy for a few years to run that business, and when the worst of the GFC had passed, I came back to the UK and got back into specialist finance again. So in a number of projects leading up to the Atelier project, that's the potted version of my foray into finance.
So when was the Atelier start? When did that happen? I know.
So I was working.
How did it come about?
Yeah, so I was working for a business called Amicus, which was one of the larger bridging lenders back in the 2017, 2018, 2019 period. I'd gone in there to do some special projects for them. The business had got itself into a bit of a pickle, and I was just trying to help them with some strategic advice. They'd applied for a banking license and had expanded quite quickly. That business, in the end, went into administration. I helped them with the exit process of that. During that process,
sorry to jump in. Is that really helpful for you as a CEO now? being in one of those businesses that grew really quickly, obviously had their problems, and can you take on that now?
You learn far more out of failure
Yeah.
and challenging markets than you do when it's a frothy market. And
Yeah, when it's easier, I think they're good, don't they?
there's no doubt about that. You learn from the tough times. So, and there's a lot of good things about that business, and there was a lot of not so good things about that business, and I took a lot from it. But as is often the case, when you're in business, you spot an opportunity, and during that process, M&G Investments made an approach about purchasing the loan book, and that they didn't contact me. They contacted a colleague. As a result of that, I got into some conversations with M&G about the potential for them to purchase the loan book, which it wasn't really for sale. It was always going to be run off.
Yeah.
And we had some really, really good conversations with M&G, and they said to me, well, we're really interested in coming into the short-term property market, a finance market. Would you be interested in working with us on a joint venture? So that was over the Christmas of 18.
Yeah.
We put together a business plan, and within months of that, we'd signed a joint venture agreement. So M&G, to matter of public record, owned 75% of the business, and I and the rest of my management team own the other 25%. So that was the birth.
That was really close to, obviously, then what happened?
Well, and then what happened? The story is we ended up signing the joint venture agreement with M&G the day after the general election. So Boris Johnson had just got his 80-seat majority. Everyone thought sunny climes.
Here we go. Yeah.
Here we go. Yeah, it's going to be a big uptick in the property market, etc. And we didn't sign it the day after for anything other than the fact that that's how long it took. It wasn't a strategy to do that. Can you hear me, Marcus?
Oh,
I think we lost each other.
No, I lost you then. I've got you back now. Yeah, I've got you. I'll have to remember that 12 minutes.
So we signed the joint venture agreement the day after the general election. That was not by design. It was just the timing. And of course, we went off for Christmas, and when we came back, we all started to hear about this thing going on called COVID. And
had you lent any money? You haven't lent any money by then, though. If you just
we'd lent some money. So in the run up to closing the joint venture agreement, we were
beginning to suffer already.
So yeah, we'd done I don't know, we've probably done 25 million of lending by then,
right.
Something like that.
Oh, so you were already in the game. You weren't like
we were already in the game. A very small team in a service office, handful of us, literally a handful of us, and so we came back after Christmas. COVID thing kicked off. Like everybody else, we went to work from home, and I remember sitting at home thinking, what does this mean? And M&G, who have been a very supportive equity partner all the way through our project so far, they're still involved, said, look, our view is there's going to be a lot of opportunity in this market. They called it absolutely right. They reckon they said it's going to go on for 2 years.
Yeah.
That was their view.
That's really reassuring to have a partner that come in and go, don't worry, as opposed to
basically what they said. Let's take baby steps, but we see this as an opportunistic market.
Oh,
so
nice.
That's what we did, and we carried on lending. But what happened with COVID is it brought the future forward for us. We had always anticipated doing larger loans. We were doing bridging loans up to £1 million.
Right.
That was the original business plan. But the future business plan was to then get into the development space and large ticket loans, and that would have been some 2-3 years down the line.
Yeah, because that's what I know you as. That's you're a bigger ticket dev. You know what I mean? Right. But that wasn't the plan at the beginning. Then it was
the plan to start off doing smaller, more granular loans.
Yeah.
To get into the rhythm of processing loans and managing risk and portfolio and all that kind of good stuff. But the future business plan was to do larger loans.
Yeah.
What COVID did is it actually brought that future forward, because we saw better credit risk in those slightly larger loans that were development. We understood that risk a little bit more. And also, when you're funding a development, you're funding things that are going to come to the market in 2 years' time.
Yeah.
So, in a market
Anyway.
where you're saying, well, it's going to be impacted by COVID for a couple of years, the product that you're building is going to be coming
He's
to
going to be
market.
ready, yeah, when it's ready. As long as you get your guest work right, right? You got it.
Exactly. So that's what we did. So we accelerated the process of doing larger loans that were predominantly development loans, and as we went through that process, the average loan size got larger and larger and larger. And I think as we sit here today, our average loan size is about 10 mil. Our range of loans at the minute is the smallest one on the book is about 3, and the largest is about 40. So
Wow.
that's the range that we do. So when I reflect on COVID, obviously it was an unpleasant time for a lot of people, and a lot of people lost their lives. But when I think about what it did for Atelier, it actually brought the future forward, and we became a better business because of it, I think.
Yeah. And do you think? Well, it's so difficult to say. You can't A/B test history, can you? Like, where would it have, what would the change have been if COVID hadn't happened? But like you said, just moved it quicker because you had to move into a new market, right? Was it just? Well, it just made sense to.
I suppose if you did the A/B test, yeah. I mean, difficult to say. But what we found during COVID is we were able to originate. It gave us a bit of time to set up our systems and processes. We invested a lot in IT and tech, which we benefit from today. And, it allowed us to create a business that we've got today. If you were to lift the lid on Atelier, even though we're an independent non-bank lender, if you were to look inside the business today, lift the lid off, it operates like a regulated business. So we're in an unregulated market. There's all the kinds of disciplines you'd expect to see from a regulated entity.
Was that a conscious decision at the beginning, or was that just because you had the extra time in COVID?
Well, it was a conscious decision at the beginning, but I guess when you're operating in an uncertain market, you've got to be even more conservative in the way in which you view things. So we were never going to do any. I mean, our primary investor is NRG. They are a huge £400 million business, listed business, and they were never going to allow us to do anything than operate as an institution. And that's something that's through the DNA of the business and is with us today. I guess so. That was so. We wrote a lot of very good business during the COVID period. I guess that's where the good story ends for a little while, and then we start to face other challenges.
If you think about those challenges now, I mean, they're like, I know COVID was maybe a benefit. That's benefit's the wrong word, but you know what I mean. It was a plus for the business. Yeah, and then you've got obviously like the cost issues, and then the trustonomics, and that's been an interesting time to be in dev, though.
Wow. So here's the thing. So economically, the tide went out for a little while, didn't it? And it felt like at the end of COVID that it's like, oh my, there's a bit of a mini boom going on. GDP's going through the roof. Yeah. Everyone's delighted that, it's over. And then all of a sudden the tide started to come in, and we started to see a big wave of inflation. Yeah. And I think inflation probably hit construction first. Yeah. So we were seeing horrendous costs. So things like steels, for example. So when we did steel work doubled. Almost overnight. Still,
how do you deal with that? Because you've already, especially with stuff you've quoted and stuff that's you start around construction companies, just have to deal with, because it's impossible. You can't then stick to build cost, etc. that you've agreed, can you? You can't. Well, you've got to change it overnight.
If you're in a deal if you're in a live deal, so you've done the deal and you've done the structure and those costs increase, what do? Well, you work with people. Yeah. That's what you do. You don't jump up and down and scream and shout. You understand.
Because they didn't put the cost up either, did they? It's something you both got to manage.
So we work very, very closely with our developers. And our mantra is, if the developer's doing the right thing, we're really happy to support them. Yeah. And that's what we did. And we worked with people to work through those challenges. And the great thing about SME developers as well, which most of our customers are, is they're very resilient and they're very resourceful. So costs were going up, and they were going toe to toe with their suppliers, keeping the costs down, going out for alternative quotes, being really, really agile, value engineering where they could, and trying to do all the right things, renegotiating things with us. Yeah. So I think he brought out the best of British developers.
Yeah,
We saw some really,
that
really
helps as
good.
well, because a lot of the fall by the wayside that don't have that, maybe just even like the energy for it, because it's harder.
Yeah.
I think that's made the industry better. But, not maybe got rid of a bit of debt. A little bit like what happens with lending. 240, we lose a few every time it gets tough. Do you think it benefits the industry?
I think it's a really tough question, because I think for those that have stuck with it, people have this perception that property developers are mega rich, and they're taking loads of money off the table. They work on really fine margins. And I think for those that have stuck in, I think they will start to see profitability and good opportunities again. But those that are still working in the business today, boy oh boy, have they been through some tough times. They've worked for years for nothing, a lot of them, and so probably for that point, a lot of them have fallen by the wayside, and that's going back to the point we were making earlier on. If you're going to try and deliver 1.5 million homes, someone's got to develop them. And a lot of that capacity has left the market.
Yeah.
Both in terms of trades, but also as well, developers who are prepared to take the risk.
Yeah.
Because ultimately,
we talked about it offline, didn't we?
did.
Because I've said this to you before, like your social media is great on it, because it is bringing up a lot of the issues that we've got. Because it's not like they're not saying the right things, but it's the actions, isn't it? Like how are we gonna combat it? Obviously, they've got to get you guys to lend, right?
well,
it's a very difficult. I know they've got a tricky job as well, but that's a big promise.
big tick in the box, right? So my way has always been in business is when you start with the idea, what is it you're trying to achieve, right? However ridiculous that might be, you start with the thing that you're trying to achieve. And in this instance, they've nailed their colours to the mast. They said, we're going to build 1.5 million homes. So they've come out and said it, right? Yeah. And everyone smirked and laughed in the background.
Like your audacious goal is supposed to be the one that you keep nailed to your bedroom wall, not the one you tell everyone, but they've gone.
So the things they've said, that's what we want to achieve. So I think that's a massive start. What you then have to do is contemplate what actions have I got to do to get there. And that's what we're not seeing enough of at the moment. And I think that's, I think they seem to be, it's that whole thing, isn't it? How do you eat an elephant? Right? And it should be eat it one bite at a time.
Yeah.
And that's what we're not seeing. They try to fix a lot of the big picture issues around planning, but actually, the big infrastructure projects, the creation of new towns, that will deliver in 5 and 10 and 15 and 20 years time.
Yeah.
What are you going to do today to get 1.5 million new homes in this parliament, which is what they are saying, and we're not seeing enough activity there.
What they need to do you think, from the government point of view? I know I hate talking about politics on here, but it is important. Get a lot of people in dev on here. It's going to be massive. Their decisions are going to be huge for all of us in the coming years. What do you think they need to do?
And actually, I don't think it's a political issue. I think it's beyond that. There are obviously be a few people that don't want to build 1.5 million homes, but broadly, most people will be in agreement. We need new homes, and we've got to build them. So I think broadly, you'll see support. Everyone talks about planning as being a major issue, and I do agree with that. Planning is an issue. But actually, if you look at the stock of consented sites at the moment, so the number of sites across the UK that are in planning, that's what you need to focus on. If you're going to deliver, bearing in mind it takes 2 years to build most projects, you're a year into your parliament, where you are going to achieve that is for things that either where you got planning consent granted already or things that you've got in the system. So I think they need a moratorium on a lot of the eco reports that we see. I mean, I'll give you a practical example.
10,000 reports that you've got to get.
Say, I'm an anti-environmentalist. I'm just a realist.
Yeah.
We've seen a site fall over recently. This is for 9 new homes in an area that needs 9 new homes. I won't say where it is because I don't want to call them out individually. But that deal has fallen over and the planning has fallen over because the local council are getting fixated on a dried out pond that's at the front of the property, and have insisted on further investigations as to whether nukes are there.
It's nuts, isn't it? Do you know the weird thing? I know this probably isn't for every council. I'm really disparaging, especially. Don't worry, they don't listen to this anyway. But a lot of the people in the planning departments, like my brother-in-law's in local government and he works in the planning department, but he comes from lettings and he's a developer and he understands stuff. The amount of stuff that just gets kiboshed by people that don't really understand the needs of the local area. They'll talk about noise pollution because it might please one of their constituents. Do you know what I mean? It's
Yeah.
not all experience. It's not like you've got a load of surveyors in there talking about it.
No, that's right. And I feel for the people that work in planning offices. I am not a planning department beta where a lot of people are. If you work in the planning department of a local authority, that is a very, very difficult role. You will be overworked, and you'll be working against an enormous amount of bureaucracy and vested interests.
Yeah.
And probably not a lot of money. And I feel for the guys and girls that work in those.
And now they're doing it's not split up well enough. You do the big ticket stuff, but these guys are dealing with every aspect of it. Like there's got to be separated, isn't it? And this is the thing that's going to benefit us the most. You know, we're not going to get 1.5 or as many houses as we need when you're looking at conversions or conservatory extensions. You know what I mean? Like there has to be a better way of doing it. Not that I've got the answers, but it seems crazy.
There are a load of practical things you can do. We are starting to see a little bit of movement. So when you go back 20 years, when you got planning permission, you got a notification through from the local authority. You got planning permission, crack on. It might say things like use the same bricks as the local neighbourhood, or a few other bits and pieces like that. But you got your planning permission, and that was the end of your planning journey. Right? As long as you built it, what you said you were going to build, and you did it to build in control, everyone was happy.
Signed off at the end, done.
When you get planning permission now, that is the beginning of the journey. So it's almost the beginning now. So you'll have Section 106 considerations. You'll also have the discharging of pre-commencement conditions, and pre-commencement conditions, as it says on the team, they're things you have to satisfy before you can start to develop. And sometimes those lists are huge and onerous. There'll be reports, there'll be traffic reports, rights of light, noise abatement, newts, bats, bunny rabbits, all sorts of things that you have to satisfy before you can crack on. Archaeology, all sorts of things you have to do.
When I said about people running out of energy, do you think as developers sometimes they get to that point? I know obviously you're using external sources for it, but you just look at it and go, it's just too much. Do you know what I mean?
It's exactly what happens, and then what you'll see is so that is a gravy train for the people that are producing those reports. That are 1,500
new reporter at the council's doing all right.
1,500 quid to sit there and count the number of bats there are on site and that kind of thing. So that's what the developer has to put. Then they've got affordable housing contributions, so they will be expected to build affordable housing for free.
Yeah.
So basically, you've 20, 30, 40% of the site has got to be affordable.
Is that how much it is now? Like you get it's like
And
anywhere.
And what that does is it off. Well, it can do two things. In a lot of cases, it just renders the site unviable. You simply cannot make it work economically. So you'll get planning permission for it, but that planning consent will die.
Yeah.
No one will ever build it.
Because your margin just goes on the affordable housing, and you go, there's no point then we're breaking
You've got to build 40% of the site or 20% of the site of those houses that you're going to sell at a discount to a registered provider. That doesn't make any sense to a property developer. Well, the other thing that you find, which I think is even worse, is effectively to subsidise the money you're going to lose on the affordable housing, you then at the remaining housing, you have to build to such a high spec that, that's why you only ever see luxury developments of flats. You never see anyone trying to sell start homes because it doesn't stack up anymore. So you're moving the economics of the site around, and the remaining people that are going to buy the houses on the site end up having to pay for the affordable.
Yeah.
So it's a very, very unfair system. And all of these things all contribute to why it's, I don't know what the stats are, but I would say less than 50% of, I'm going to say 50%, it's probably about 50% of consent go nowhere.
Really?
So 50% of the projects that planning departments are spending hours and hours looking at result in no houses.
Well, just because they won't become financially viable because of the planning. Right. Like it's just a wheel.
They'll die for a reason. They'll die for some reason. So a substantial amount of effort is ploughed into going nowhere. Yeah. And the problem we've got is we're not seeing any engagement from government at any level to do something about that. Now, if you could improve that and get another 20 or 30% of those sites to start, now you're starting to
Getting there. Yeah.
all of a sudden.
Are they aware of it? You always assume, like, are they hearing you? Do you know what I mean? Have you got a voice there where you go,
I wrote to Angela Rayner last year twice.
Yeah.
And didn't hear anything back. No acknowledgement or anything. Now, I'm sure she was very busy, and I'm sure they must get millions of letters from crazy people like me. But I don't see any engagement. You got the House Builders Federation are doing an awful lot of lobbying, loads of good work. You've got other industry bodies, but there doesn't seem to be any sort of engagement.
It blows my mind that if you look at the government like a business, that if you were a business, you'd be shut down. When you go, this is what we want to do, but we're not going to put anything in place to do it. You go, right, that isn't a business. That's just a great idea that you said.
Solutions on the end of your nose, and that's what's so frustrating about it.
Yeah.
That's the supply, and also as well, my other critique of the government's policy is they are focusing on supply side, so that all the work they are doing is about increasing the supply of housing. Someone's got to buy it, right? So if we live in a capitalist market, and the route to success with all of this is by solving the demand side. So you can do things to alleviate the supply side. But what's the point of building all of this stuff if there's no one there to buy it, right?
Yeah.
So my next question is, and typically with most things, if you've got lots of customers wanting to buy something, the market will usually solve that issue for you.
Yeah.
You don't need government intervention. Show me customers and I'll show you a solution.
Yeah.
So if you can create demand, SME property developers will find a way. They will find a way of delivering to that demand. So I believe, yes, focus on planning. Yes, focus on the availability of finance and all that. But actually, your real focus should be on the demand side.
Customers, yeah.
Because there's lots of other good things about this as well. So what have we got at the moment? Well, we're likely to get no more than 1 million transactions this year on property transactions, that is, on resi.
On resi, yeah.
Yeah, I think it peaked at 1.7 million over the last 10, 15 years. So a huge drop in the number of transactions. And we all know that there's a dearth of first-time buyers, particularly since they withdrew Help to Buy.
Yeah.
First-time buyers are essential to the property ecosystem because that's the money coming in at the bottom that then gets the rest of the chain to move. You also create social mobility. You'll get the right people living in the right houses, so you won't end up with people stuck in big 5-bedroom houses. It should be sold to a family and they should be in a bungalow. The whole thing starts to move again. Workers can move around as they need to move around to jobs, and then you collect more stamp duty. More people go to B&Qs, buy stuff.
Just it moves everything on, doesn't it?
So I've been saying the government should focus on creating more demand. How would they do that? Well, for first-time buyers, the most effective intervention we've seen in the last 50 years, other than Right to Buy, was Help to Buy.
Yeah.
Help to Buy, after we've sent all of our young people through university, saddled them with 40 or 50 grand debt.
They got no deposit.
The society is what we've asked them to do. The least we could do is give them an equity loan so they can buy their first house.
Yeah.
So to me, huge social value in that.
Well, it might be coming up, mightn't it? It's not coming up.
Well,
Can you see it happening again? Like you say, it kickstarts the market. I was watching an economist the other day actually at one of the events. I think it was Bright Stars, and he was saying similar thing: Help to Buy at the front end and taking stamp duty off of downsizers, because then you aren't going to get these people, like you say, stuck in 5-bedroom houses when the kids have flown the nest. Because why would I downsize when I've got to pay to drop? You know what I mean? It doesn't make any sense to them. And we'd take the stamp duty off of people over, I don't know, say 60, and then at the bottom end, and that all of a sudden frees up the market for everyone, and it moves around much quicker.
I'd be more radical than that. I'd be advocating bringing in Help to Buy. Now let's just talk about Help to Buy for a second. Depending on what metrics you look at, there are about 350,000 properties changed hands on Help to Buy in the last iteration. So it's about 100 billion of property sold on Help to Buy.
Yeah.
Sure, there were some people will say, oh, yeah, it pushed up property prices, or it made a load of money for property developers, and well,
got the market.
there you go. That's what happened in a capitalist system. But but it was also cost neutral. In fact, actually, the Treasury have made about $1 billion out of it so far, out of Help to Buy. So it costs. All you're doing is you're lending the government's balance sheet to an individual. It's cost neutral. It costs nothing to do this as a policy. So bring back Help to Buy. That's the first one. That gets the property ecosystem moving again. And I think it's also socially a just reward to our young people, typically who use the system, for all the things we've asked them to do, including get sucked up with a huge debt going through university. That also then is the oil for the rest of the system. I think on stamp duty, it's an incredibly regressive tax. Taxing somebody arbitrarily for moving makes no sense to me. At the maximum, it should be 1% across the board.
Yeah.
Because I suspect the Laffer curve, if you were to apply that to stamp duty, would show you that the higher you push stamp duty, the less you get of it. I think if you were to do that, you'd probably see annual transactions move up by somewhere between 300,000 and 600,000. I think if you were to bring both of those policies in, and your tax take would probably increase.
Well, that's the thing. Have they not done the maths? When you go, do you know what? If we tax them a little bit less, we'd move it.
The other thing that you would do is you'd also create economic growth.
Yeah.
Because by doing that, construction is, I think, second or third biggest contributors to GDP. If you've got the country building again, all of a sudden you're creating economic growth, you're creating jobs and all the other things that we need. So I can only think that it is a political decision not to do it rather than an economic one, because it makes no sense to me.
There must have analysts, right? Because I know all the analysts work for the good banks. Surely there's analysts in the government that go, who are they listening to? I know it's the same conversation about the other side. We could bang your head against the wall, but who are they listening to come up with the idea that it's not viable? Because everyone with, any economist that you speak to or anything knows it is. But where are they getting their info from?
Well, you probably find that there's an illogical conversation going on about this, in the sense that it probably feels, without wanting to stray into party politics, it probably feels counterintuitive to this government to provide that kind of support, home ownership, that they would be focusing on affordability and the rented sector probably. And I do understand that as social housing. We'll come on to that in a second. But also as well, there were a lot of stories when Help to Buy came around the first time that a lot of the listed developers, your big, Bell One, people like that, did make a lot of money out of Help to Buy. They shifted a lot of property. A lot of the CEOs got massive bonuses. Yeah. So I think again
doesn't look good for that party.
Well, with this government. So I think, and also as well, there will be instances of people that have taken out Help to Buy loan with the government and then got into trouble with it, property falling in value, and they're stuck in negative equity. But
as a whole, we've got to look at it as a whole.
With any intervention,
exactly.
Right? You're going to have great stories and you're going to have not so great stories. But it's an intervention that has definitely worked. There's also another really important point here: is we've got a tenure issue in the country at the moment. We've got people in the wrong tenure. So you've got people that want to buy, can't, so they're stuck in rented. Well, what does that do to rented? Pushes up the price. So at a time where we've seen unprecedented rental inflation over the last 3 or 4 years, and the government are doing everything they can to get a better deal for tenants, which I broadly agree with. The one thing they could do is make sure that they provide something to get all of the people that want to buy out of the rented sector and into the owner-occupier sector, to take the pressure off the rented sector.
Yeah.
And again, it's another one of those issues that just requires joining up.
Seems obvious. Yeah. Like I said, it's hard, isn't it? Because again, we talked about it earlier. I love the fact that you push it on social media and stuff as well. You don't want to be like, it's difficult. You don't want to beat the drum so much that it just becomes that echo chamber of negativity. But at the same time, we've got to talk about the fact that we can't build. We can't build with what's going on at the moment. It's never going to improve. But I honestly, whenever I speak to people about it, it's very difficult, right? Because we're in this industry, so we know people, so you live and breathe it every day. But I just don't think that everyone's listening. I just don't think what you said and what you're doing don't match up.
No, that's right.
Do you know what? How do they answer that?
Well, look,
They don't.
that's the frustration, and I think sometimes it's people are looking for the big. They're looking for the big silver bullet answer. You know, let's create some new towns. Let's do the big. You know, let's build some more roads. I think it's because I think it's easier in some respects. You know, or we can create 300,000 new homes if we build a new city over there. Where actually, you know, the answer is far, far, far closer to home, and it's less glamorous, right? It's less glamorous than
The other thing as well. If you're not in development and you're not in finance or you're not in this world, they've got to keep the optics good for the general public as well, haven't they? Like the big stories of what we're planning on doing, as opposed to just actually getting it done.
Press release that you're going to build a new town outside Peterborough. It's easy to do a press release on that. If you were to do a press release saying that you're going to cut SIL payments and affordable for property developers, they would know what the hell you're talking about. So I think this is the unglamorous end.
Yeah.
And I think that creates some challenges too. But look, we deal with SME developers every day.
Yeah.
So, the unlisted SME developers, they are such a resilient, hardy group. They're still out there doing it, despite all of the things that
they're still grasping it.
These are people that are putting their own money at risk, purchasing sites and developing, homes. We're in the beds market, so we do residential, we do student accommodation, we do care homes as well. Yeah. So basically, if it's got a bed in it, we do it.
Right.
So that's our market. And
is that the market you're going to stick with? Are you out of interest? If we want to use it, just what you're good at?
For the time being, I think it's a good market. We understand it well. We've got a good reputation in that market. And, I think, in a slightly uncertain market, you got the phrase "stick to your knitting."
Yeah.
And that's what we're doing. And when I look at those developers that we deal with, and the brokers that are advising very many of those developers, they're a very hardy and resilient bunch, and we've got this budget coming up in a few weeks' time, which is creating even more uncertainty. But we're doing deals. We've got.
How many more wait and sees can we have? I think it's just going to wait and see for another 3 months because of this. The budget's not going to be the end of it, is it? There's going to be another one around the corner.
Yeah, and look, and I'm touching wood as I say this. Typically they will make it sound like it's going to be really bad, and then it ends up just being bad.
Yeah. The Economist said the other day, so they literally leak all of the shit stories just so they can go, well, not bad, was it?
Exactly. Yeah. Oh, thank God I only lost $5,000.
Yeah.
And also as well, I think we'll see a rate cut in December. I think that was quite tactical to keep it at 4 yesterday. It was 5-4 on the vote.
Yeah.
I think it will be, serve everyone up with a stinging nettle sandwich.
Yeah.
At the end of November, and then cut rates by 25 or 50.
So we'll all be happy again. Yeah. Well, I've just fixed mine for 5 years, so not very. Although again, the Economist guy was saying that we save more. We've taken up. I've taken way too much of your time. I won't be too long. But he was saying part of the issue of the drop in the interest rates isn't just to improve on the selling loans. It's the fact that we are saving more money, like percentage-wise. We save so much more than say the States. So we don't buy our way out of problems. We kind of seriously see there's no benefit to spending it. We're quite a frugal nation when it comes to saving. It's about dropping that so they can get the money back out there.
Since COVID, people are being much more likely to save, and I think they are. I think we'll see a lot of changes to things like ISAs. I think they are going to. And I have mixed views on this. I don't like the idea of taxing anybody more than they should be taxed. We are taxed into oblivion. We are taxed for literally everything. I think there will be taking actions to get people to do other things with their money other than just save it. Yeah. Which
there's billions of pounds there that could be put back into the economy.
Well, I think what they want to try to do is revive the stock market, the UK stock market, by encouraging people to invest in stocks and shares again, which was something that seems to have fallen out of fashion. So I think there'll be actions to deal with that. Look, I'm an optimist. In the long run, in my market, everyone mostly agrees there's a shortage of housing.
Yeah. which is great because you lend money to people that want to build houses.
So in the long run, if everyone agrees there's a shortage of housing, then, you know, that's a pretty solid market to be in, despite all of the travails and difficulties we have. The long-term fundamentals are good, so we're just keeping our head down.
Just great. Well, that's what you can do, isn't it? Because you can't actually affect the policies and stuff, can you? You can lend the money, and there's developers and build, and we just keep going, as we always will. That's all right. We will end it on that positive. I would love to get you back on. We didn't even get into talking about the business or anything, but it's really interesting. I love these because they always go off on a different tangent, and I don't think we've talked as much with anyone about the actual problems that we're facing as a kind of a society, as opposed to just, you know, individual businesses. But it's been really interesting.
Well, it's been great to have the opportunity and come on and vent, and thanks to everyone.
And most people use this as a therapy session, you know, just
Exactly.
But if anyone wants to get hold of you, Chris, obviously all of your socials will be on our socials. But if anyone wants to talk to you about what we've discussed or Atelier as a whole, what's the best way to get in contact with you?
But the easiest way to get in contact is obviously our email addresses and whatnot are on the website, or just DM me on LinkedIn, and as a lot of people do, and we'll get in touch, and we're always up for a chat.
Amazing. Thank you very much. And thank you everyone for listening and watching today. And I really appreciate your time, Chris. Cheers.
No props. Thank you.